Alrighty then, it's Dr. Matty Morgenstein, repping the atomic letter D this week. By now you've made your application and completed your budget, and hopefully not in this order. In this case, B before A. But now it's time for the homework session. If you're about to write a contract on a home or already under contract, the next step in your loan process is to get your application underwritten, which requires the lender to verify the stated answers on your loan application. Well, how do lenders do it? Well, it starts with a D and stands for documentation. Applying for the loan, that's the easy part. Supplying the documentation lenders require, it's a bit more challenging. But the degree of difficulty surrounds the profile of your income, assets, and credit. In fact, that's what I refer to as the trinity of the application. Based on what you supply the lender for qualification will determine the amount of documentation required for your income, assets, and credit worthiness. Let's focus today's example on a W-2 wage earner and the initial minimum documents you're going to need to supply your lender. So here's the cheat sheet for the stop, drop, and dock. Okay, first base. We're not speaking to the lovely self-employed folks this week because the docs lenders require for that type of profile are on a whole nother level. Today we're starting with the plain vanilla, easy breezy W-2 income, aka the wage earner. Be prepared to document your monthly income that covers the most recent month and most recent year via your W-2 gross earnings. Lenders won't care about your net pay. Qualifying is a matter of your gross pay. So if you're salary or hourly, start with enough pay stubs to cover a full month, at least 2 or 3 pay periods. And if you don't have any performance pay, any spiffs or bonus income, then the most recent W-2 may be enough. But if you have any performance pay, it would be necessary to have the most recent W-2s, a la overtime. Now, the technology integrated in the loan process is constantly improving or removing the amount of manual documentation. So the collection of the income, it's not all that common for the lender to verify your income through an e-verify system. Now, this works best for employees of corporate America that don't have any irregularities in their pay. So if you're a W-2 employee, but you earn your wages through commission, e-verify may not likely work. Same for self-employed. However, the benefit of the e-verify method is less documentation for you and quicker processing time for the lender. Next level, the assets, which funny enough, they can e-verify too. If working off of simple accounts with the usual suspects, Chase, your Wells Fargo, your B of A's, many of the current application portals will allow you to link your cash accounts using your login credentials during the application. Like the e-verification of your income, the e-verify your assets, it doesn't actually retrieve the bank statements like you receive in the mail. Rather, it pulls an activity print, covering 60 days, all the credits and debits to confirm you have the cash to close and perhaps the reserve requirements. The e-verify method may not be a fail-safe system if you end up not finding a home until several months later after application, because sometimes you'll have to supplement the electronic system with actual bank statements. Moreover, if your bank isn't set up for e-retrieval or you don't wish to link your accounts, then be prepared to supply the 2 most recent bank statements in your most recent quarter of retirement accounts. Please understand the lender will want to see all pages of the asset statement. Here's an example. If there are 20 pages total, the lender is going to need all 20. That's 1 through 20. But if you're a paper peep and you only keep core pages of your bank statements, be prepared to remit the full statement. The easiest thing to do is just download the PDF. Most everybody now has online banking, and banks are required and lenders to produce this document. Yes, the lender will want every single page, even if the last page is an advertisement for ice cream. So check your paper statement. If it's printed on both sides, front and back, odds and evens are required. Last, credit or your credit worthiness. Yes, the bank will need to pull your credit, even if you've checked it recently and can confirm its excellence. If you apply with multiple lenders, prepare for each lender to pull a credit check of their own, either hard or soft. You'll just need to trust in the process, as the credit check will be current and verify your debts and your current credit scoring or rating. Lenders will not allow you to just submit bills of your current long-term debt. That's the purpose of the credit check. But at the same time, credit checks, they don't cover your utilities or your auto insurance or your cell phone bills. The lender's focused entirely on your long-term debt. like your auto loans and leases. But hang on, sometimes there are instances when a lender may not report your debt to the credit bureaus. If there are any non-reported long-term debts, they'll have to supply the lender with a material which may be as simple as the most recent statement, or it could be a copy of the note or the account agreement, so the lender can verify the total terms and conditions and the financial impact. An example of this may be a private mortgage. If you got a mortgage that's reported to the bureaus, perfect. That should help curtail your current housing expense documentation. Now, if you're renting, the lender may require one of two options: the rent checks for the last year, or a way to verify your payment history with the landlord or property manager. Now you're off and running, but remember, the documentation required will hinge on your profile, how exactly you earn your income, and the types of assets you hold, and your complete credit history. Just because you provided some or all this information at the beginning doesn't mean that you're completely finished with this. Often you'll have to update these documents along the way. It's not to be taken personal, it's a matter of tying the associated docs with the actual close date of the loan. Typically, all the required docs should be within 90 days of closing. So just because you've applied and the bank has underwritten your file doesn't mean that you're completely out of the woods. These are all tips for the initial round of documentation. Once your loan is back from underwriting, there'll be several other documents needed to furnish for what they call the final approval. Now, if you need any help, get at me, dog.